Welcome to this video. Welcome once again. Today we're going to look at what? Input VAT and output VAT. Input VAT and output VAT. But before then, let's take a look at the meaning of VAT. What VAT is. VAT is the tax added to the cost of a product or service and is levied for the purpose of what? Generating revenue for the government. I hope it's clear. Is that amount added to the cost of a product, of a service, and is levied by what? The government. In order of it is levied for the purpose of generating, revenue for the what? The government. So as the government can use it and do their social responsibility, build roads and do other things. That is VAT. Now, these VATs, we have what we call input VAT and output VAT. And mind you, it's slightly different from VAT inclusive and VAT exclusive, which we are not going to go into that now. What we are doing here is input VAT. Now, what is input VAT? I will give you practical example of input VAT. Just know this. Input VAT is that VAT which is what? Included in the price when one do what? Purchase. When one do what? Purchase vatable goods or services for your business. And is what? Claimed back if your business is what? Is registered as a VAT vendor. If your business is registered as what? As a VAT vendor. That is to say, you have the right to what? Remit tax, collect tax on behalf of government and remit for the government. Now, let's do a practical example of this input VAT. This beak here, I want to buy this beak. And they say this beak costs what? 15 euro. And the shop I'm going to buy this beak from now added the VAT on top. It now becomes 17 naira. Now, originally, I'm supposed to buy this for how much? 15 naira. But because the person has added VAT on it, I'm now buying it for how much? 17 naira. Because and again, I am going to buy this thing so that I will resell it. So I will pay 17 naira. Input VAT, I will input 20 naira on top to make it 17 naira. I will now get this big. That is what they say for which one purchase vatable goods or services. And this must be a vatable goods. You understand? Just understand this. So when I purchase this, I have added money, including the VAT that the person has added. I purchased this amount, including with the VAT. That is to say, 15 naira is the amount I'm supposed to what? Supposed to buy it. Then the VAT is 20 naira. I now pay 17 naira to get this big. Because what? I am purchasing. You understand? I am purchasing. That is VAT input. You that is buying will buy alongside with the VAT imputed in that product. Like for example, when you go to all this mall, let's take ShopRite as an example. Mall. You want to buy drinks, this, then you pick. You understand? Then you went to the cashier. They will sum up everything. They will bill you and you will pay. If you check that printout they are giving you, if you check the printer they are giving you, they added a tax inside. You understand? The tax you are paying including with the tax. So that is tax input. They've imputed the tax and you pay the money to buy the tax, to the tax and the original amount and the amount added to it. Hope you understand. Good and fine. That is tax input. Tax input. Now let's take a look at tax output. Tax output is that VAT which is what included in the price when selling vatable goods or services, and which is what paid out or remitted to the revenue authority if your business is registered as what VAT vendor. Now, VAT input deal with what? When you are buying. You buy alongside the what? Including the VAT inside. I hope we are seeing this. Now, but VAT, output VAT is when you are what? Selling. Now, I bought this thing for 17 naira, including the VAT input inside. Now, I want to resell this. Maybe after adding my gain, everything, I decide to sell this for 100 naira. Now, I will now calculate the VAT and add on top of the 100 naira. It might become 110. Then I will now sell this for 110. That is tax output. I've added the tax so that I can sell it out. And that amount I'm receiving from here now, I will now remit it to the government. You understand the difference? So VAT output deal with what? When you are selling your product in which you've added the VAT element inside. But VAT input is when you are buying with the what? VAT element inside. And tax output is when you are selling with the VAT element inside. Now, check out this. Input VAT and output VAT. I want to check the difference. We want to check what? The difference. Now see. Input VAT is an asset. Do you know why? Because you are buying with the tax element inside. That is to say, the tax authority is now owing you that amount of money you've added to buy this product. It's an asset. They are not owing you that amount. Now, output VAT is a liability. Why? Because you've added the VAT in which you are going to remit what to the tax authority. And you've collected it. You are owing the tax authority now. In input VAT, the tax authority is owing you. Output VAT, you are owing the tax authority. Is that clear? Now, input VAT is what? Claimable. You can get it back from the revenue authority. Like I said earlier, input VAT, you can get it back from the revenue authority. While output back, it is paid out to the revenue authority. Are you getting it? Now, the amount, for example, you spend, the amount you added in this big is 20 naira. It shows that the revenue authority are owing you what? 20 naira. Now, you now sold these goods out for 120, and the tax element inside is what? Is 10 naira, let's assume. Okay, let's assume it's 20 naira. The tax element is 20 naira. You buy the tax element is 20 naira for your purchase, and you are reselling the tax element is also 20 naira. Now, when you buy, when you purchase, the tax authority is owing you what? 20 naira. Then when you sell out, the tax authority, you are not owing the tax authority. Then what will now happen is that you now take tax authority. Yes, I know I'm owing you 20 naira, but I paid for tax, for inputs, but I paid. for me to get this. So you are owing me 20 naira. So we are going to kneel off. We'll settle each other. That is to say, nobody is owing each other again. Is that okay? Hope you get the logic. The logic is clear. Input VAT and output VAT. Now, if input VAT is greater than output VAT, what will happen? If input VAT is greater than output VAT, you will receive a refund on the difference from the revenue authority, meaning you have paid more than you receive from sales. When your input is higher, the revenue authority will give you the balance. They can refund you by cash, by credit, or by both. But if cash is no longer visible, I don't think they can refund with cash again. It's by credit. They will just, yes, by credit. Whenever you have a liability, you can use that amount to nil it off. You understand? So, input VAT, whenever it's greater, the tax authority will refund you. And if output VAT, if the output VAT is greater than input, you own the difference to the revenue authority. If your output, the one you sell, is higher than the one you bought, you are owing the tax authority. Hope you understand this. At times it's confusing, but you just have to calm down, be patient, and you will get the difference. Input is when you are what? Purchasing. Output is when you are what? Selling. The VAT included in the goods you are selling out is called your what? Output VAT. The VAT included in the goods you are buying in, you are purchasing into your business, is what we call input VAT. I hope that is clear. I hope that is clear. I don't want to waste most time. So if you have any question concerning input and output, don't fail to put it on the comment section. I will definitely attend to it. Please, and don't fail to subscribe to my channel. Let's grow together. In the next video, we'll be doing computation of input and output VAT so that you see how the computation looks like. But for now, do have a wonderful day. Thank you. See you in the next video.